Google will stop using an intellectual property licensing scheme that let it delay paying U.S. taxes, marking a major change in international tax practices. We're now simplifying our corporate structure and will license our IP, intellectual property, from the U.S., not Bermuda, a spokesman said in a statement. For more than 10 years, Dutch, Irish and U.S. tax law let Google pay an effective tax rate in the single digits on its non-U.S. profits. Yet international efforts to limit tax avoidance, spearheaded by the OECD, have led governments to change their rules, causing firms like Google to reappraise their approach. Google's changes to its tax structures came as Ireland closes its so-called double Irish tax loophole. This let major U.S. companies channel global profits through Ireland via tax havens such as Bermuda, letting them avoid U.S. tax. Ireland in 2014 decided to phase out the arrangement, ending Google's Irish tax advantages in 2020. The decision came after pressure from the European Union and the U.S. Google has always said it pays all its taxes, including all annual and one-time income taxes. Over the past 10 years, our global effective tax rate has been over 23%, with more than 80% of that tax due in the U.S., the spokesman said. In another sign of the shifting global approach to tax, the Trump administration's Tax Cuts and Jobs Act, which came into effect in January 2018, ended the reason for U.S. companies to hoard foreign profits offshore. Now profits that have been made and taxed abroad are not subject to taxation when returned to the U.S. For more on this story, visit the news article link.